Good morning, everyone. As you check on, please make sure your microphone is muted if you have the capability of unmuting or muting yours. Also, if you could, turn off your video. That way the screen has just one person at the top. Thank you. Thank you all for being here. I'm excited that everyone is able to be on this video conference. We're super excited for Stone, Rudolph, and Henry for once again giving us some updates on the things that are happening in our financial community right now, and they'll give us some great insights and some tips for moving forward this year. I don't know if Dustin Wallace is on, and if he is, if someone can just nod if we can see if Dustin is on yet, and if not, we'll just keep moving forward. Dustin Wallace is our new president this year for our 2020-2021 campaign year. This year we'll be doing things a lot different in times past. So we're also going to offer workplace where we'll go on site and we'll be masked up, or we'll be doing some virtual, whichever is more comfortable for the company, and we'll do it as a Zoom call. We'll be able to go in, answer those same questions. You guys can, if you're not comfortable, you can be able to join in when we do our workplace campaigns. When you normally would join me on a site, you can do a virtual, or you can do a video clip. We can offer a video clip where you can put your video together and we can play it. Of course, we know if you can be possible and you're comfortable to please come live, that would be the better scenario because people want to ask questions and people want to hear your stories. And COVID-19 has given us plenty of stories to talk about. Some of the things that your local United Way has done, and I'm sure some of you have already know, we partnered with Community Health Foundation, which allowed us to get more money to you all. We also had a CARES grant, and our emergency food shelter money was more. So within the past 3 months, we had an additional $700,000 that was passed out in our community to help with the resources during the COVID-19. And you guys have done excellent as far as getting it to the people that need it, being able to be a resource for our community. And for that, I want to say thank you all so much for that. I wrote a grant. We also have a shower unit that is available to anyone who is needing it. Hi, Chris, how are you? If you could knock off, turn your video off. Yeah, thank you. We also have a shower unit that's available for anybody who needs to use it or wants to have an event. We have a book and we'll take you through what that looks like as far as borrowing the unit if you want to do an outreach. I'm going to ask again, if Dustin Wallace, are you on? Are you ready to say anything to the group? He's on, but he said he isn't showing, but that's okay. Can you unmute yourself?
Can you hear me?
Yes,
can you hear me?
We can.
Hey everyone. Sorry I'm having some technical difficulties, but just want to say hello and look forward to working with you this year. You should have received my email, but if not, feel free to reach out. I'll have Valerie send out my email address for United Way and then also my cell phone. But feel free to reach out at any time. Thank you.
Thank you. One of the things that we've already been talking about as far as our executive committee is how can we do fundraisers at a time like this when it's hard. And we do have some ideas. And one of the things, ooh, I don't know what just happened. Can you guys still hear me?
Yes.
Okay, you might not be able to see me, but you guys can still hear me. We have some fundraising ideas, and what we would love to happen is from at least 3 partner agencies to jump on and join us with that. We're looking, once we finalize what that looks like, we'll announce it to the group, but it's one that COVID can't step in, weather can't step in, and it's gonna be fun, family-friendly activity that we think will be a great resource, and we'll be giving that information out in the next couple of weeks. We also are having our kickoff that you all receive, and you guys can just email me if you've not received it, but our kickoff will be August. Hold on, I'm gonna give you the exact date. sorry, my August 19th. Nope. Yep. August 19th. Is that what it is, Jeff? You have that? Check it. Yeah. August 19th. If that's not the date, I'll resend it out because nothing wants to work this morning. Of course it doesn't. But August 19th will be our kickoff, and it'll be at the airport, and it'll be at 5 o'clock. So we'll continue to send out information. Please look for that. I would love for you all to be there so that we can, so our partner agencies and work partners can see each other and meet each other. And if they have any questions, they can move forward on that. Our next special guest will be Kevin Fowler, and he's from Legal Aid. He's gonna talk about some of those issues that we are having legally with some of our clients, and he's going to touch on that. I'm turning that over to you, Kevin.
Thanks, Valerie. Should I turn my video on or off?
Go ahead and turn it on, sir.
Okay. Apparently it stopped from you folks, so it won't. That may be a benefit to y'all, so you won't be able to see me. But I'll turn it on if you want me to, either way. Thanks for having me. Good morning, everybody. My name is Kevin Fowler. I'm the managing attorney at Legal Aid, as Valerie said. I believe Valerie wanted me to sort of address some of the things that we might be able to provide and help a lot of the agencies with regard to Corona and several legal issues that are, I'm sure, very apparent to everybody that does this kind of work. First and foremost, if you notice on this flyer, the type of work we focus on is unemployment benefits, housing issues, food stamps and other types of benefits related to that, health benefits, and we do a lot of work with domestic violence victims. All of these issues are central to what is going on with COVID. And of course, we provide benefits at all times, but we've also obviously, as you have, experienced either a drastic increase or a drastic concern about the drastic increase we're about to experience. Most important, I guess, is let me give you, if I could, a number and my email so that if you ever have clients or if you have questions that you're wanting us to address because there's a legal issue that's arisen, it doesn't have to be COVID related. I think that's the focus of this flyer, but any of those issues, we want to try to help and try to give what we can. So my number is area code 931-552-6656, which of course is our general number, but that would get to me. And then my email is just first initial is K, Kevin, F-O-W-L-E-R, kfowler@las.org. I strongly suggest that you send any kind of inquiries, or if you want to ask me about it first, about somebody you think we might be able to help, give me a call. Of course, this again is focused on COVID, but I remind you, we would try to help with any type of legal issues that have arisen for people that you're trying to help. And that ranges through all these things such as unemployment benefits, housing issues, evictions, which of course are going to go up. The information on the flyer as well, I think, is very helpful. And I don't know about you, but a lot of times you fail to look at your own website because you advise people to use it. But I did go on, and if you go to las.org, it will initially, on that very first page, give you a quote-unquote browse resources for COVID. And there's several pamphlets that pertain to a lot of the things that your clients may be experiencing because of COVID. So it may be helpful. As most of you may have also be experiencing, what's the worst of it is there's two words, confusion and delays. Any benefits, any unemployment, mostly what we hear is less that I've been denied and more that there's confusion and I'm just not getting anything. So you may be hearing that. Sadly, there's not a lot of good answers for that at this point. Most of the time we have to have something to appeal. Other than that, everybody knows there's been expanses, and I believe, Valerie, you did want me to kind of discuss that part of it too, that there was an expansion of what people may be able to get because of COVID or what they should do.
Yes, please.
Okay. I think everyone knows that there was an expansion. Sadly, that's all about to expire. However, it appears that there is going to potentially be an extension of or some of these benefits. That includes protections from being evicted, extension of unemployment, expansion of unemployment, food stamps, all of these things have been affected by the CARES Act, which was a response to COVID, as most of you know. Most of those things, at least as of now, will be expiring. So we're either going to be impacted by the vast number of people coming off of that are going to start losing housing with absolutely no protections. And also the issue of benefits and unemployment, the expansion of food stamps. All these things are going to be affected. Certainly call us at our number, email me. Those are things we want to try to help with. The only other thing I always stress is go apply. Anybody that doesn't know if there's an expansion or doesn't know if they qualify, there's no way to know until you apply. And sadly, that's not a very good system right now because there's been such an expansion of the need. And so that's become very inefficient, but it's all you can do. Then if they get a decision that seems to be incorrect or inaccurate, that's when, of course, hopefully we might be able to provide advocacy to help them. So I think that kind of covers generally. I'm happy to take questions or address something you don't think I covered, Valerie. But most important, call us if you have a client that is going through a civil legal problem and can't afford a lawyer, which would be a vast majority of the people you deal with. I should stress we cover, of course, Stewart County and Houston County along with Montgomery County. We cover 4 other counties other than that, but we definitely cover all the ones that are related to United Way Agency in this area.
Thank you so much, Kevin. Does anybody have any questions for Kevin while we're here? Especially when it comes to, I'm sure we get a lot of calls on unemployment, not being able to receive, or they're waiting for it. They're still in the queue for unemployment, or for what are their rights as tenants? Does anybody have any questions for Kevin? Okay, I'm going to assume that radio silence means he covered all of it. Kevin, how about that?
Okay.
Okay. Well, thank you. Huh?
Thank you. I think I did get CC Carmack did a chat. Should I address that? She asked about people are going to start getting a lot of questions about evictions because essentially, to put it as best I can, if there was federal related money or mortgages that was on rental property you had, the CARES Act prevented you from being, or well, legally they weren't supposed to be able to evict you until after August 23rd. The thing is, all the court requires, and I've been involved with Judge Shelton on this, all that is required under the law is a declaration regarding whether it does fit under the CARES Act protection. Now that's a lot of property, certainly Section 8, any public housing, but they're very aware of that. But then if you're just purely a private owner of property, then all you have to do is affirm that you're not covered by the CARES Act. That's a complicated way of basically saying that you're going to still get a lot more calls and fears. They still have to go through the legal process. The most important thing I try to tell people when they call our office worried about getting evicted or getting a notice is you don't have to go anywhere or do anything until the judge tells you, and call our office. Unfortunately, because of COVID, we are limiting any kind of access right now into the office, but there is a notice and we do promote calling that number. If we don't have someone that answers the phone, we do get back to them, but we'll process that. The big problem is that unless they change the CARES Act or they extend the protections, as of July, well, this basically today, they can provide a 30-day notice to evict. And come about August 26th is the docket day that's going to have a lot of these cases, you can be evicted for non-payment of rent. So I hope I didn't get too confusing about it, but the bottom line is it also has to be about rent. So if there's any other allegations, then they're not included in the CARES Act. So let's say, for instance, it's damage to property or, they're bothering a neighbor, something like that, the court can still proceed to hear it. But I think the most important thing I like to instill in people that call us because of the fear they have and the fear that somebody's going to put them out, the only thing to ever tell somebody is they've got to go through the judicial system. And sadly, if they're that afraid and somebody shows up trying to intimidate them, the most immediate response is to call the police. I know that's an unfortunate thing, but that's the only way. And we've had very good experience with the Clarksville Police Department giving clear instructions to landlords. You cannot do this. You've got to go through the court. Most landlords, of course, know it, but they do try to intimidate people all the time. But sadly, if you don't pay the rent, we all understand eventually they're going to be able to get you out. All the CARES Act does is delay that. And again, it only applies to federally subsidized housing and to houses that have mortgage that have some sort of federal involvement. The interesting thing about that, of course, is that's virtually every mortgage. But there's a lot of people claiming it doesn't on these declarations when they file. I hope I kind of answered that. But very important is we are the agency that you would call for eviction-related issues. And we promote that, and at the very least to give advice. And most important that they know they don't just have to leave the residence, that they still have a home until a judge says otherwise.
Thank you. Is there any questions for Kevin? Can you all hear me?
No questions? Yes, I can hear you.
Oh, okay. So one of my questions for you really quick, Kevin. So when it's time for it to be over, the expectations is that the person's going to have to pay all the rent available at one time, or that would be something they would work out with their landlords?
No, there's two things about that. Most of the time when you go to court, and I'll say this especially for Montgomery County, probably true for the other counties, the first thing the courts are concerned about is, will you give up possession of the property? Because what they're looking at is how this is affecting the landlords and the fact that they're not being paid any rent. So let's take care of that, and then everybody can then worry about how much you may or may not owe later on. So many times the judge will not, here in Montgomery County, will not even address the issue of how much you may owe on that first court date. Okay. So that gives more time. Then they reset that for a trial often. Even if, and this is very important, even if you owe rent, for a large number of who we work with, they're either on Social Security, SSI, they're on limited income. So they're what's called judgment proof. So the likelihood is they may never have to pay it. A lot of people, I mean, you don't want it on your record, and yes, you owe rent, and that can be a problem in and of itself, but there's no sort of requirement for you to pay, and there's no sort of, other than them simply finding a way to go after your wages and garnish and things like that later on, is how they could make you pay. But the court won't order that, and the court won't do anything because you're not paying. The landlord or the plaintiff would have to figure out how to get that money. Certainly arranging payments is fine, but I just would definitely tell people to be very careful about making arrangements with a landlord or with anybody about, okay, if I pay you this, you let me stay in, because things can go awry from that point. So you just have to be very careful. And of course, as everybody says, always get it in writing. Something along those lines might help. But I will stress one more time, call us. And also we do have resources on that las.org. We have all the pamphlets and all the information on there as well that talks about a lot of these issues that probably explain it clearer than I am. But yes, you can be held to owe for all that plus damages, but that's usually a separate issue done later on.
So more like in civil court, correct?
Right. Well, all this is, and I understand how you describe it, all of it's in civil court. But the detainer warrant, which is what you receive in order for them to evict you, is the legal process that they have to use. When you do that, you also have you have the damages part of it, which is frankly rent, damage to property, whatever else, cleanup costs, and that is usually just taken care of later on.
Awesome. Thank you, Kevin. Is there any questions from any of the agencies about anything, something that you may be needing? Something that's going on in your agency and you're willing to talk about it? We have a few minutes before we go to our next part. No one? Chris? Nothing? Cece?
Cece asked about the eviction, and I'll just tell her too, if she'd like to call me about it too later on, I'm happy to talk to her about it and explain more, because what she said, are they allowed? And I think I explained it about the federal related and all that, but as you can understand, it gets complicated as what they will allow to go forward and what they won't. Most important is go to court, contest it if you can, And they've got to prove that it's not under the CARES Act in order to proceed. And if it's not a property that's under the CARES Act, I know I'm repeating myself, but if it's not a property, it's not under the CARES Act, they can proceed with the eviction at that time. But they have to do that to the satisfaction of the court.
All righty. Well, thank you so much, Kevin. You did a great job. And we'll make sure I have flyers here and I will get those passed out to you all, or anybody who wants to stop by and pick them up. You're more than welcome to stop by the office, and we have more than enough flyers that you saw posted up there that you can pass out to any of your clients as they come into your office. I think that's about it. If no one has any questions, we're going to move right along, and we're going to say thank you for Stone Rudolph and Henry once again for allowing us to have this time, and they are going to move in. I'd like to introduce Steve Springer. Thank you.
Good morning. Hi, Valerie. Just wanted to say thanks for allowing us to be part of the program again this year. We're excited to do this. And my name is Steve Springer. I'm one of the partners here in the firm. And with me is David Fitch, who is a manager in our tax and audit practice here. And I've been here a long time, David. I'll let you speak a little bit about yourself, but I've been with the firm this year 20 years and been doing what I do for probably close to twice that amount of time. And so how about you? Tell folks a little bit about yourself.
Thank you, Steve. I've been with the firm now for 10 years. I'm a CPA here. I do both taxes and audit, and they keep us busy all year long. And we are very, very thankful to work with United Way and with our nonprofits in the area and help them, as we'll talk about today, comply with regulations and be of service in whatever way we can be. So with that, we'd like to talk just a little bit about the firm here, introduce ourselves as a firm. We've been around since 1954, so over 65 years now. We are a full service accounting firm, offer of course taxes, which is what everybody thinks about when they think of CPAs, but we do have a pretty large assurance department where we help our clients with audits that are required by government regulations or reviews or compilations, whatever is needed by their regulating agency. And we also have client accounting services department that helps with our small businesses and their filing needs, our technology department, consulting, and we have a certified financial planner on staff as well, Brandon, who does a great job helping both us and our clients meet their retirement and financial planning needs. That's a little bit about us. And again, we thank you, United Way, for letting us be a part of this presentation today. And so we'd like to start off with just a question from the Department of Labor, or really a statement, and expound on that as we think of nonprofit organizations today. So DOL stated that nonprofit work is a complex and important sector in both our economy and civil society. So why would you say that is, Steve? Why is it important and complex?
Well, first of all, I'm glad it's a government agency who's saying this, because they're recognizing the fact. It's definitely complex in that, believe it or not, nonprofits are some of the most regulated organizations that are out there. And we'll probably talk a little bit more about why that is, but certainly there's a lot of regulation involved. I think the government, as well as the private sector, recognizes that the services provided by nonprofits, if the nonprofits were not doing that, who would be picking up the tab for it? You know, that would be something that individual families would be required to take care of certain things, or maybe the government at large. So I think the government wants to support and encourage the nonprofit sector, because if nonprofits didn't exist, perhaps the government would be having to take care of those things. So we know how well that works. And in terms of importance, I don't think we've ever gone through a period in our history when we're seeing how important nonprofits are. With the last 6, 7, 8 months has really borne out a lot of needs in our society. So yeah, it's definitely complex, definitely important, and we'll talk a bit about that complexity as we go on.
Yep. All right. And before we get into some of the regulators, we just want to talk a little bit about who's responsible for regulating the entity itself. Who's in charge over at nonprofits in general?
Well, there's different levels, obviously. We have federal, we have state, and we have local regulation, depending on what the situation is. But just to kind of point out why, there is so much regulation. Nonprofits have something that no other organization has, and that is tax-exempt status. Mm-hmm. And so the government wants to make sure that if they're allowing that, which that in itself allows more resources to go into programs, because you're not having to pay taxes on your donation income and those types of things. because of that, they want to make sure the money is going where it's intended. It's being spent in the right way. So I think that's the main reason there's so much regulation on nonprofits.
Absolutely.
But that filters all the way down through state and local government as well.
Okay. Now, when we think about nonprofits in particular, we think about the board as being responsible for it. And I know a lot of times in our experience or my experience, I've seen people just kind of want to add that to their resumes. Oh yeah, I'm a board member at this nonprofit. But it's a really important position. When you think of maybe a Fortune 500 company, they don't just put anybody on the board. They have people that have knowledge of the business, right, that can add value to the board and to the organization as a whole. So when we think about nonprofits, what are some of the responsibilities for board members?
Yeah, well, we have a slide here, which I hope you're seeing, that says there's three main areas: strategic, legal, and then fiduciary. So we'll talk a little bit about those. Strategic means that you as the board get to provide that kind of overarching guidance for the organization. You help to identify the mission, to create the plans, to put all that into place. The board is responsible for hiring the CEO and determining the compensation of executives and things like that. So from that standpoint, the board has really high responsibility, as I call it, the overarching principles and values of the organization, setting the tone. There's also that legal care or legal duty that you have there. And there's duty of care, there's duty of loyalty, and also obedience. Duty of care means you're doing things the right way. You're being prudent in the way that your affairs are carried out. Loyalty means that you're putting the needs of the organization above those of yourself. You're not getting on the board in order to divert business to your company or make money off of that relationship. And also obedience means you're faithful to the mission. I mean, you have to stay the course and make sure that the decisions that you're making, the things that you're doing, are those that are going to further the mission of the organization. And then lastly, fiduciary, that's protecting the property that's owned by the nonprofit, the financial assets, and the reputation, making sure that you as a board member are being a good representative for that organization. So all these things, strategic, legal, and fiduciary, they're all extremely important. And I hope that's something that, as your boards have orientation and then maybe even on an annual basis, you revisit those different responsibilities, and maybe during board retreats and things of that nature. So I think that's really important that you focus on those things.
Absolutely. One thing I'll add to that, as you mentioned, faithful to the mission. We'll talk a little bit later about our application for tax exemption and being a nonprofit. The IRS really looks at what you're doing as far as your activities, that they are faithful to that mission, and you're not, for example, if you're Meals on Wheels, you're not out building houses for people. That starts getting away from your particular mission that you've been approved for as being a nonprofit. So as Steve said, you have to be faithful to that mission to make sure what you have been approved for as a nonprofit tax exempt organization is what you're continuing to do.
That's a really great point. Somewhere in a box, in a cabinet, is your original Form 1023 application that was submitted to the IRS. And I hope you all will pull that out and take a look at it, because as David said, that's what the IRS approved you to do. It's the things that were outlined in that 1023 application from way back when.
Yep.
It'd be a great idea to brush that off, read through it, make sure that you're not going outside of what you were approved to do.
Yep. And not to get too far ahead of ourselves, but if you do go outside of that and you start getting what's called unrelated business taxable income, which, as it sounds, becomes taxable. And obviously we want to avoid that at all costs as a nonprofit. So just keep in mind that as we go along today, and we'll talk a little bit more about that 1023 and some of those taxes later on. Let's get back to our regulators here. So Steve, why is it important? You kind of mentioned a little bit about this, but why is it important that they be regulated? What is specifically at stake?
Well, a few things. And there are a lot of different types of nonprofits out there. There are some who receive government funding, grants, et cetera, or private funding, as far as that goes, maybe from trusts or foundations. With regard to that, you need to make sure that you're spending the money for the intended purposes. Money always comes with strings attached. It's for a purpose. And so when you have those types of stipulations, it's your responsibility as management and the board to make sure that money gets spent the way that it was intended. So that's one thing. That's one reason for regulation. Another is just that tax exempt status that I mentioned. From the viewpoint of the IRS, if they're going to give individuals and businesses out in our society a tax deduction for the money that they give your organization, then they have the right to know that they're spending it for the right purposes. So that's another thing. And I think the third reason there's so much regulation is because look at who you serve. Often the role of nonprofits is serving some of the most vulnerable in our society. So I think from that standpoint, that's another important reason why there is so much regulation is to make sure that those folks that we're serving are being treated fairly and equitably. So.
One other thing I'd add on to that is the public confidence, I think is important, because people aren't going to donate if these organizations aren't being held responsible for the funds that they're receiving, which I think is kind of what you said in a nutshell. But we've always seen that in the past. Probably a few years ago, there are some local nonprofit organizations that came up in the news about things that may not have been above board, as we mentioned earlier. So those are important to make sure that things are being handled like they should be, so people are confident that their dollars are going where they should.
Right.
The next question is kind of a softball, but who's responsible for compliance in your organization? Is it just the board? Is it just the director?
No, I would say everyone. Everyone needs to understand what their particular role is when it comes to compliance. Now, there are certain things that are high level. Absolutely. That maybe the executive director or whoever needs to deal with, or the finance person, but there are areas of compliance that affect every level within the organization. So that's something where I think education is important, making sure that people know what's in their area of responsibility, and then have some way to monitor to make sure that those things are getting carried out.
Yep. And lastly, I know you can't name all of their regulators, but name some of the regulators that are responsible for nonprofit organizations.
Well, we've mentioned the IRS. That's probably from a federal level, that's one of your biggest regulators for sure. The Internal Revenue Service, and then look at your grantor sources, whether that's Department of Health and Human Services or Education or whatever it might be. All those folks are your regulators as well, from the standpoint that they require audits to be performed, reports to be filed, things of that nature. So yeah, there's all those. At the state level, we have both the Secretary of State's office, not only from a corporate standpoint, but also from charitable solicitations type of activities. There's a regulator there. And also the Attorney General's office in Tennessee is one of your main regulators as well. If things aren't being handled properly, then I assure you they're going to be the first to knock on your door. So the Attorney General's office, has the ability to revoke tax-exempt status, and they will if things aren't handled properly. On a local level, there are still activities that we conduct that fall under the purview of our local officials, and so all up and down those different levels of government. We'll find regulators.
Yep.
We'll talk about a lot of those today.
We will. Yes, sir. All right. I just remembered that I forgot to tell everybody that if you have a question, feel free to use the chat feature. We have someone monitoring that'll let us know if you have a question. And also, if you want to use the raise your hand feature, if you just want to go ahead and vocalize your question, feel free to interrupt us at any time. We want this to be as successful and informational for you as possible. And we want you to get something out of this if you can. And so we'll talk about our objectives here, which first off is just to identify some selected compliance issues. There's all kinds out there, like Steve said, every different program has different compliance issues, but we're going to hit some of the higher level ones that'll hopefully help you identify some possible deficiencies, which will lead you to hopefully prompt some discussion at your organization, either with the manager, the board, whoever, and just try and start making some corrective action. And it's not all going to change in a day, but hopefully we can identify some things to help you just to make sure you're all above board and complying with the regulators that you are responsible to. So as Steve mentioned, there are 3 levels of compliance: the federal, state, local. We already identified a few of those regulators. We're going to start at the federal level and kind of work our way down. So the first one has come up a couple of times is that income tax. I'll start just talking about the 1023. That is that application Steve said's in a box somewhere that you got maybe 20, 30, 40 years ago that you probably haven't even seen, but is there when the IRS approved that initial application. And so if you were now to go and apply, it's actually required to be done electronically. Within the last, I believe, year, that has been changed from being a long 30, 40 page form to just an electronic application. And there's two types. If you want to go with the 1023 EZ, which as it sounds a little bit easier than the long form, and it really has to do with your gross receipts is what determines whether or not you can do the EZ versus the full 1023. But if you do the 1023 EZ, it's a $250 filing fee, flat rate, and it's only about 3 or 4 PDF pages. It's not that difficult. You'll identify your mission, identify what part of the 501 code that you fall under, and hopefully get a relatively quick turnaround. Usually it's within 2 months or so, the approval, whether or not you get that approval for the nonprofit status. Then the full 1023 is now required to be done electronically, as I said, and requires quite a bit more information. I think we have a questionnaire for our clients that's about 30 plus questions. So there's a lot to it. So it's not as simple, but it is required, and it'll kind of help you it does ask a lot of valuable questions. You have to get a lot of valuable information about what you're really doing, why you're doing it, who's going to help you do it, how you're going to fund that mission. So it's a good thing for nonprofits to be able to go through the process and then the exercise and hopefully get it approved electronically. Tell us about the SS4, Steve.
Well, I'm going to make one additional point on the 1023, and that is, if you're already recognized by the IRS as a tax-exempt organization, you've been through this process, all right? So the things that David was describing would relate to a new organization. But if you've not done this, you are not tax exempt. Just because you got an EIN number, just because you call yourself a tax exempt, does not make you tax exempt. So if you've not been through this process, then your organization is not tax exempt. So that's just a key point there.
Yes, I know I've run into a few clients that with the Secretary of State, you say nonprofit corporation, but that doesn't make you corporation. That's just what you told
the
Tennessee.
state of Tennessee will actually give you a nonprofit charter, but that does not make you tax exempt with the federal government.
Right.
So you've got to be sure that you have all your I's dotted and T's crossed to make sure all these things have been done. So, okay. Well, the SS4, you mentioned that. That's the identification number, like an employer identification number. That's just the process where you can obtain that number. You can do it by filing on paper, or you can actually go online to the IRS website, irs.gov, and there is an area where you can apply online for it and actually receive that number. Oh, it takes 5 to 10 minutes. Probably 10 minutes to fill out the application and actually receive your number that same day, typically.
Yep.
So that's a pretty easy process.
Looks like we have a question. Go ahead, Dalen.
Okay. It was asked if there's more information on tax credits related to Families First Act. This came up when completing our 941 report. I think it is Form 7200. Not sure about that.
Yeah, we're going to talk about that a little bit later.
Yes.
That's included on a later slide. So we will not forget that question. So we'll get to that. One more question?
Okay, we also have another one. Once you're already a tax-exempt nonprofit, is there an at-a-glance calendar of compliance filings you have to complete each year, like a data checklist?
Okay. Well, actually what we've done is we've created this presentation. We've put the due dates for a lot of these reports in our presentation. And so you could certainly create a timeline. That would be a great tool. Tell you what we could do, we could be happy to email anyone a copy of this presentation.
Absolutely.
And we'll give you our emails at the end of the program. Be sure and jot down that. David's emailed mine. We'll be happy to do that. And I tell you what, we can even work out a one-sheet timeline probably for a lot of these filings. We could create that and be happy to send that out as well. Okay. Good question. Any others? Not at this time? Okay. All right, the next item on here is Form 990. So after you've received your tax-exempt status, there's an annual tax return. I know it seems kind of silly that a tax-exempt organization has to file a tax return, but you do, because it's just part of that regulatory power, I guess, that the government has. So they want to know how you're spending that money, how much has come in, how much has gone out, where did it go. It even lists in that 990 things like executive director's compensation, other board member compensation. It asks how many hours that the board members serve, all kinds of interesting information. And just so you know, it's public information. there's a website, GuideStar, right?
Yep.
There's a website called GuideStar that is kind of a repository of information about nonprofits all across the country. And you can actually go and pull up the tax returns for various nonprofit organizations and see all that information. So just be careful. What you put on that tax return is public information. Other people can and will see it. So that 990 return is due typically. Let's say you're a calendar year-end organization. Your return is due by May 15th, the 15th day of the 5th month following your year-end. If you're a June 30 year-end, then you're looking at November 15th of that report being due. So again, all this is at the federal level. We're talking about income tax. So these three things do apply.
Yep, and the IRS does look at them. We have found a few of our clients where the IRS has asked questions about them, specifically related to their mission sometimes, their program services. So they are important. I know a lot of people think, well, there's no tax due, so we can just file it and be done. But they are reviewed, and also donors, potential donors can look at your 990 and see. A lot of the times they'll look at the administrative versus the fundraising or the program costs to see how they're being divided. You know, you'd prefer the most possible dollars being going to your programs versus your management. So those things are important that are included on there. Just a little bit about the 990s. There's three different kinds, as you can see on the slides there. There's a 990, which is your full tax return, a 990 easy, and a 990N. The 990N is just an electronic postcard. Essentially, it's a one-pager. You're just saying that you have less than $50,000 gross receipts each year, and that can be rounded on the 3 previous years. If you had one go over and 2 under, you still met that average of less than $50,000 of gross receipts for the year. File a 990N and you're done. If you're above that threshold and below 200,000 of gross receipts or $500,000 of assets, then you can file a 990 easy. And it's pared down a little bit. I believe it's about 4 pages versus 11 or 12 on the full form. You still have the board information on there, but it's more summarized. You don't have the detailed functional expenses and whatnot. And then, of course, if you are above that threshold, then you're probably already aware you filed the full form 990. There's a lot of information in there and good information about your organization and how the last year went.
There's also information in those full 990s about donors. If your larger donors, I believe the threshold is at $5,000 or more.
Yes, sir.
You have to list the names and amounts of the donations made by your larger donors. So just keep in mind that everything you do within your organization is public information. It's information like that winds up in that tax return. So just an FYI.
Okay. All right, and so we already heard a little bit about some law changes, and there's a few that we'll discuss today in addition to some of those employer credits and things available to our organizations. But as far as some of the law changes go, we know 2 years ago the Tax Cuts and Jobs Act came into place and had a pretty big impact on the individual tax return, especially the itemized deduction versus the standard deduction, where it made it a lot more difficult to itemize versus taking the standard deduction. Which what that means is, on your tax return, if you donate, that's one of the main areas that you itemize. If you donate to a nonprofit organization and it's more than your standard deduction, then you get a bigger tax break, essentially. Well, if we increase that standard deduction, it makes it harder to itemize. The thought was maybe people won't donate as much to nonprofits or churches, et cetera. So one thing that was increased with that Tax Cuts and Jobs Act was our amount that we can contribute to a nonprofit and still be deductible. It used to be capped at 50% of your adjusted gross income. And with that new tax law, it went up to 60%. So it gave you a little bit more opportunity to meet that threshold of the itemized versus the standard.
And then COVID came.
Along and changed it up first again. Yeah, we're just getting used to the new rules and we got a new one. And this one only applies to 2020. So it's not, the other one was 8 years, 60% is good for 8 years. Whereas this one is only good for 2020, but this is a good opportunity to tell your donors or tell those people that are thinking about donating that you can now deduct up to 100% of your adjusted gross income in the current year. And if you somehow donate more than your adjusted gross income, if you have some losses or something to offset your AGI, then you can carry it forward for up to 5 years to be used against that 60% cap. So I know we've had some clients that this has come into play. So it's a good opportunity and a great thing to tell your donors that this is a great year. And obviously everybody's in need, especially the nonprofit organizations. So this is a good tool that you might be able to help employ to some of your larger donors that were thinking about donating anyway, and this gives them an even better opportunity to help themselves and help you all.
Right.
And there's one other that's nothing new, but it's a good opportunity to tell your potential donors, especially those that are older and have some larger retirement accounts that they need to distribute items out of. It's called a qualified charitable distribution. Why don't you tell us a little bit about that, Steve?
Well, this is for folks who have IRA accounts, individual retirement accounts. And you all may know that when in the past, when someone reaches age 70 and a half, they're required to start taking what's called required minimum distribution. So there's a certain amount of money they must take out of those IRAs each year and pay tax on it, typically, if it's a traditional IRA. And so the IRS has a provision that says that if you would like to take distributions from your IRA and give them to charity, it's a direct transfer from your IRA account to the charity, then those distributions count towards your required minimum for the year, but they're not taxable. So you essentially, you get a tax deduction by not having to pay tax on the distribution. That's really important because a lot of our senior folks are not able to itemize. You know, they no longer have mortgage interest and things like that that would allow them to itemize on their taxes. So this is a great way to give. I have spoken to every single client that I deal with who's age 70 and a half about this, and many of them have started doing their charitable giving this way. It's a wonderful way to be able to take their distributions and to get it tax-free. Now, they can do up to $100,000 per year out of their IRA and it can come out tax-free. So that's something that you all need to know as board members, executives of nonprofits, as another way to encourage folks to give. If folks have that situation, especially if they're not able to itemize, this is a great way for them to get a tax deduction, essentially, and get those dollars out of the IRA. So instead of making donations with money from their checking account they've already paid tax on, make it out of the IRA and never have to pay tax on it. So that's a great tool.
It is, absolutely. All right, and then as we were mentioned earlier, we do have some law changes that are, some of them are still in play and are opportunities for nonprofits and for-profits alike. So tell us a little bit about some of those programs that came along with the CARES Act.
Yeah, I mean, this is one of those things, if you haven't heard about these, I don't know where you've been. Seems like the news has just been bombarding us with information. These are primarily government loans and also some tax credits. The loans have been worked through the Small Business Administration typically. What is called the Payroll Protection Program, or the PPP loan. It's probably been a lot, I know there's been a lot of press about that. And if your organization has not applied for this loan, it's still not too late, but time is running out. The clock is ticking. The ability to apply has been extended out to August 8th. And so basically it works like this. If you are able to get a loan, it's based on payroll and other expenses. They've now expanded the program so that you originally had like 8 weeks to spend all that money on very specific items like payroll, rent, some other things. Now you have up to 24 weeks to spend that money. So, but the main thing you need to take away today is if your organization has payroll and it has not applied for this loan, you need to call someone today and check into it. Check with your local bank who makes SBA loans. Talk to them today about what's required. So that's a key thing. The other thing is the economic injury disaster loan. That is for any organization that has been negatively impacted by the coronavirus, whether that be through layoffs or loss of revenue or whatever it might be. These are some very long-term loans. I think it's actually up to a 30-year loan at a very low interest rate that you can borrow to have funds to tide you over until we get past this pandemic period. So those two things right there, if you've not looked into it, you really need to, that's your afternoon task right there. You need to be looking into it. The other two things are some tax credits that the IRS came out with. And this is situations where people, because of sickness or the loss of their child care or whatever the situation might be due to the COVID, then some tax credits are available that would actually, and the way it works is if you're paying wages or sick pay or whatever as a result of COVID, then you actually get to claim that as those payments as a credit on your quarterly payroll tax reports, and you get that money back essentially. So anyway, those are all some things to look into. That we're not going to have time to go into specifics on all these, but just know that these are out there. So now that you know it, call those people that you depend on, your accountants or your bankers or whoever your advisors are, and put your heads together and see what might apply to you, because there's some great opportunities there to get some relief.
Absolutely. I know someone had a question about that. If that doesn't answer it, please, like Steve said, email us afterwards or call us, and we'd be happy to help.
Right.
Okay.
Right. Yeah. We don't really have time to get into specifics on these, but we'll be happy to answer questions later, certainly by email or phone.
Yes. Okay, so let's talk a little bit about another important topic as far as from the federal level, an employee versus an independent contractor. I know I get this question a lot, especially from small businesses, but this applies to nonprofits as well and to every organization. What's the difference between an employee and an independent contractor? Well, the most important thing is control. What is that person doing for you, and how much control do you have over them? For example, do you tell them what hours they have to be at your location, what tools they're using? Are they yours or are they theirs? Are they using their car to get to work, your car, your vehicle? So the more control you have over that individual, the more likely they are to be an employee. Whereas if you have very little control, you just call somebody, like a plumber is a good example, say, hey, we've got an issue with our toilet, it's leaking, please help. So you don't tell them be here at 3 and here's the tools you're going to use. It's our tools, and take our vehicle. They're showing up with their truck, with their vehicle, with their tools, and at their convenience, hopefully sooner than later. But it's really all up to them. So that's what kind of distinguishes, the easy way to distinguish between an employee and an independent contractor. Now it gets a lot more complicated. Sometimes people try to make it more complicated, but really if it comes back to control and how much you're dictating that individual, then their schedule and their resources.
Sometimes the lines are a little gray as to whether someone is an employee versus an independent contractor, but I would say most of the time it's not. And why would you care? Well, with an employee, you as the employer pay half of their Social Security and Medicare. That's probably one of the biggest reasons you care.
Absolutely.
About what classification they fall in. So as you know, you withhold Social Security, Medicare out of their check, and that's actually half of the amount. The employer matches that amount. Mm-hmm. So you as the employer care whether someone is an employee or a contractor. If they're a contractor, you just write them a check for their service, and they have to worry about paying all the taxes on that. You don't. So obviously it would be great if we could just give everyone a 1099 and not worry about it, but that's not the way it works.
Right. And the IRS does care about that. I can tell you from experience. You can't just say they're an employee if they're an independent contractor, or really it's usually the other way around, saying, oh, they're an independent contractor, but the IRS doesn't always agree with that. There's pubs out there that can give some specific examples and instructions, but in a nutshell, that's what
pubs being publications.
Publications, sorry, yes.
Not bars.
Not bars.
Okay.
There's those out there too, but they're probably closed right now. Payroll tax, another federal regulation that we have to make sure we're complying with. So tell us a little bit about the Form I-9. What is that, Steve?
All right. Well, the I-9 is a federal form also that where the employee certifies to their employer that they are a U.S. citizen, that they're not a foreign national working in the U.S. And so that's very important. We live in an area here where we have a lot of migrant workers who come from other countries working agricultural industry and things of that nature. So that's very important that they get that documentation in place as to whether someone is a U.S. citizen or not. If they're not, then then they have to have the appropriate visas and other things in order to work in the U.S. So when you're employing folks, you need to get that signed and get the documentation that's required to go with that to make sure that they are U.S. citizens, and that helps you as an employer determine what your obligations are.
And as was mentioned in the W-4, that is what you, of course, have your potential employee fill out that dictates the amount of taxes that you're going to withhold when you're having your payroll done. And that underwent a pretty big undertaking this past year. It looks completely different from what it used to be. We've had several calls from our clients, or I have, I'm sure you have, probably everybody in the firm has. How do I fill this thing out? Because it's almost like half of a tax return at this point. They're asking for your filing status, your children, dependents, how many jobs you're working, whether you and your spouse work. There's a lot more questions than there used to be. It used to just be, how many dependents do you have? Are you claiming yourself? And you're pretty much done. Are you married or single? It was a pretty simple form, but now it's definitely a lot more complicated. So be careful with those. If you don't know the answers, ask your accountant or ask somebody, because it's important. At the end of the year, when their employees receive their W-2, they don't want to be surprised by a big tax bill and then we get a call. So they have changed a lot. So just keep that in mind. And I'm sure you've noticed, if you're dealing with the new employees, that has taken place. And then what about the 941, Steve?
Well, the 941, that's the quarterly payroll tax report. So every quarter you essentially settle up with the federal government on payroll taxes. Depending on how frequently and what the dollar amount of your payroll is, that determines how often you pay that in. So for example, some employers may pay once a month, pay all the payroll taxes that they're withholding out of their employees' pay. So once a month, they'll send it into the government. Others, it's like weekly or every other week, just depends on your volume. Then at the end of each quarter, you settle up. You basically report what were your wages for that quarter, how much were the taxes for that quarter. You compare that to the actual deposits that you sent to the government, and hopefully it matches. If not, then you settle up at that point. If you owe or if they owe you, you have a credit for the next period. So, but yeah, it's the way the U.S. government keeps up with payroll tax throughout the year. It's very important they do that quarterly instead of at the end of the year. It would get out of control if they didn't do it at least quarterly. So.
And you'll see there one of those due dates as well. It's 30 or 31 days, depending on the month following the end of the quarter. So that's one of the things to keep in mind, as we talked about some of those checklists that we need. Every quarter, you got basically the next month to get that 941 filed. All right, the 940, that's just the annual version of the 941 that reports everything at the entire level for the year.
And of course, the tax that's part of that 940 is federal unemployment, but it is based off those 941s. It should match. You should have the same wage amounts reported that you've reported quarterly. But once again, it's one of those where under certain circumstances you pay it in during the year, but you only settle up once a year. That's it. At the very end, you file it in January for the previous year. So federal unemployment is usually pretty small amount of money, but it is required.
It is required. And then of course, the W2s and W3s, most people are familiar with those. W2 goes to each individual employee that you have. As we mentioned earlier, that is one of the reasons it's important to distinguish between employee and independent contractor, because of the type of form that they're going to get, the federal form. And so that W2, all your employees that received any compensation during the year gets one of these, and you're required, as we see there at the bottom of the screen, to file that by January 31st and make that available to your employees. The W3 is really just a summary statement for the W2. It totals up all of the forms that you have, and then all of the box 1, 2, 3, 4, etc. And that gets transmitted to the IRS as well, and is due when you file those W2s, the IRS. And we, of course, help with those here at our firm. I know our client accounting services team is very busy in January because we have to file all of them electronically, and it's a busy month for them.
Very, very.
And then as we revert over to those independent contractors, they have a little bit of different requirement versus, of course, the employees with the W-2. So for each individual contractor that you have that receives more than $600 during the year that you pay to them, that's not your employee, you're required to give them a 1099 at the end of the year. So we recommend, I don't know if we have it in our slides, but for everyone that we give that amount, or we think we might go over $600 for the year, to have them fill out a W-9 first before we give them payment. W-9 is similar to a W-4, where we're getting required information to file a 1099. We get their name, their address, and their social security number or employer identification number. And we need that in order to fill out a 1099 at the end of the year so that we can claim the deduction on our tax return. And a lot of times those people are hard to find in January.
Well, the best, as you said, the best practice is anytime you engage a new independent contractor, whether that's a plumber, a lawyer, an accountant, or whatever it might be, the time to get that information is right then. You don't want to have to chase them down at the end of the year to try to get all that information. So when you hire a new contractor, that's the time to get their name, address, their EIN number, whatever you're going to need to file those 1099s.
And then you just report that to them and also to the IRS. So they're expecting that information to match up on their tax return. And then the 1096 is similar to the W3, where it's just a summary of all the Form 1099s you issued and the total compensation that you issued out on those 1099s. So it's a way for the IRS to reconcile all of that.
The most common ones for the 1099s, and again, it's those payments of $600 or more during the year. The most common ones are those who provide services. So we mentioned plumbers and accountants and lawyers and folks like that, but it could be anyone. If you hire someone to do some, I don't know what it might be, some landscaping or a lawn care or engineering, whatever it might be, those would potentially be folks you need to give a 1099 to. So to be cognizant of that as you're hiring folks to do work who are not your employees.
Yep, absolutely. All right, so that's most of the federal level. Obviously, there's other ones out there, but those are some of the higher ones that impact most organizations out there. So now let's move down to the state level. So we have some potential income tax. Steve?
Yes, depending on, well, it could be issues. Certainly Kentucky and other states have income tax, state income taxes that Tennessee doesn't have. So just be aware of that. If you're operating in those states, then you may come under their tax laws as well. Another point to make is if you are in Tennessee and you have an employee who lives in Kentucky, then those folks have to include their wages on their individual Kentucky return. You as a Tennessee employer are not required to withhold Kentucky tax and remit that. That is strictly voluntary on your part. The state of Kentucky cannot require a Tennessee employer to withhold Kentucky tax. So if you do that or don't do that, it's totally voluntary. So it's just your choice. Just want to make that point.
Talk about workers' comp insurance a little bit, workers' compensation insurance and some of the complexities there.
Well, workers' compensation obviously is a state insurance system that's set up to provide care or to provide benefits for folks who've been injured on the job. That's typically the main focus. And in Tennessee, that's required if you have 5 or more employees. Some exceptions to that are if you're in the construction or coal mining industry, then even one person, even one employee, or if you're just the owner, you could be required to have workers' comp insurance. Other things that come into there is if you're hiring family members, part-time employees, even your corporate officers are included in those numbers. So you have to be careful with that.
Okay.
All right.
So unemployment, similar to that. Why don't you tell us a little bit more about that? Are all nonprofits subject to paying this for their employees?
No, not all. Okay. Where it does come into place is we have some instances here that are written. You may have heard it called SUTA, State Unemployment Tax Account. I think that's what that stands for, but it's really state unemployment. It's a state program. And there's a federal version of that, but there's also the state is the primary. And this is what fits most employers. If there's 4 or more employees and who work some part of a day in each of 20 weeks, consecutive or not, in the current or preceding calendar year. So we see it starts getting real complex here. And then, of course, there are some exemptions for nonprofits. I think there's more on the next page there. And here's a factor that we always point out, although I've had people in the state tell me they don't really enforce this, and that is they even count officers of your organization, even if they're not paid, into that number of 4 or more. But I've also had folks at the state say, we really don't enforce that. So I wouldn't advise you to bank on that. I try to do what was right, but anyway, that's the general criteria for most employers. 4 or more that meet those work hour criteria would have to be part of the unemployment system. Okay. And there are certain nonprofits that does not apply to it all. For example, churches and others are exempt, but just know what impacts your particular organization.
And this also is due at the same time at those 940s, 30 or 31 days at the end of each quarter. So the next month, basically. All right, sales tax. Now, this is a really important thing for Tennessee since we don't have an income tax here. We have to generate some revenue somehow. So sales tax comes into play in every state, but especially Tennessee. So tell us a little bit about some of the important things here.
Well, you're right. It is Tennessee's primary source of revenue. So they are very concerned about identifying businesses that should be collecting and remitting and reporting sales tax. So when it comes to nonprofits, though, we do have to be concerned about that. We're not exempt just because we're nonprofit. That word nonprofit typically refers back to being tax exempt from the IRS. I mean, that's usually what it's referring to. With sales tax, in the state of Tennessee, sales tax applies to, and I'm just reading here, selling, leasing, or renting of tangible personal property, and the selling of certain taxable services, amusements, and digital products. We'll stop right there. What is tangible personal property? Well, it's anything that's not real property. Real property is real estate, land, buildings, that kind of thing. So anything that's not land and buildings, or is not what we call intellectual property, which could be like copyrights and patents and things like that. So basically, if you can pick it up and touch it and see it, then it's tangible personal property. So in the state of Tennessee, selling most of those items is subject to tax. It also mentions in this paragraph the selling of certain taxable services. Some things to keep in mind is if you're involved in repairing or maintaining tangible personal property, those services are also taxable. An example of that is if you go to have your automobile repaired, an automobile is tangible personal property. You obviously pay sales tax on that when you buy it. But if you go to have it repaired or maintained in some way, they charge you tax on that. That is a taxable service because the service they're providing is relating to a piece of tangible personal property. So Tennessee's laws are very broad and they're very complex because they've evolved over the years. I mean, we see new laws come into place all the time. We get notices from the Department of Revenue, and it's things like digital services or digital equipment or things on the internet, what's being taxed and what's not. So as we see our society and our business world changing, then so does government. Their reach changes and they add new laws to cover new products and services that are being offered out in the economy. So you got to be real careful. All right, so back to nonprofits. How does it apply? Well, one of the things you have to look at is, I'm going to jump down to number 3 and come back to number 2. Number 3 is look at the gross sales. If you're selling something, now I'm just going to use t-shirts as an example. If you're selling t-shirts for your organization and you sell more than $300 or more than $400 a month or $4,800 a year, then you're subject to having to register to collect sales tax and remit that and report it on a monthly basis. Some exceptions to that are in number 2. You look at whether these sales are regular versus temporary. So if you're selling t-shirts all the time, in my example, every month you sell t-shirts, then that's regular sales. But if you have special events that just happen once or twice a year, then that's something that they take into consideration. And in Tennessee, we call it the Girl Scout cookie law, because literally that's what prompted the discussion about it. And that is, when do they sell Girl Scout cookies? Like every February, right?
Like
I mean, it's a national tradition. So like in February, you know, the Girl Scout cookies are being sold. So as long as that sales period is not more than 30 days and they don't have these sales periods more than twice a year, then you don't have to collect sales tax on Girl Scout cookies. And that same thing applies to all of your nonprofits. Whatever it is that you're selling, if it's a limited period of time and you don't do that multiple times throughout the year, then you can be exempt from collecting sales tax. Otherwise, you're probably subject to collecting and remitting. And those types of questions are things that we're happy to answer. If someone has specifics, they want to send us an email after the program, we'll get back to you as to whether or not we think some of your activities may be taxable. Okay. When's it due? Well, you have to file a return by the 20th day of the following month. So here we are in July. So any sales that happen in July have to be reported and remitted within 20 days. So by August the 20th, you're having to report and remit sales tax for the month of July. So that's how that works.
Okay. Are there different filing time periods depending on the amount of sales? Like you only have to file like annually if you have X amount of sales?
There are some exceptions, and those are granted by the Department of Revenue. So
When you apply, I believe.
right,
Yes.
when you apply, you indicate what your level of sales is and your types of sales. And in some situations, they have some annual filers. Some folks who only remit annually and report annually, and we have some clients who do that. But the vast majority are monthly filers. Yeah.
And I believe that's all done online now, if I remember correctly, on 10
Right.
tap.
Right.
This takes care of that.
Right.
All right. So
Okay.
this exemption.
There's something to mention here. As a nonprofit organization, you may have already acquired, and I hope you have, an exemption for paying sales tax on goods that are used within the operation of your nonprofit organization. But the state of Tennessee has rules about how these items are to be paid for. Essentially, they need to be paid for when you go to the store. You'll present them with this exemption certificate, in which you're certifying that these goods that you're buying are being used within the organization, and the payment for those goods should be with a check or a credit card, debit card in the name of the organization. If the executive director goes in and uses their personal debit card to make those purchases, the store is not supposed to do the transaction. Now, I know many stores who look the other way and the transaction happens. That's not really a reflection on the person making the purchase. It's really the responsibility of the store to enforce that. I believe we have a question. Dale, could you read that for us?
Are there any differences to consider when fundraising in Kentucky? Like, are we holding an event in Oak Grove venue or solicit a donation from Kentucky business?
The question, I'll repeat it again, are there differences between Tennessee and Kentucky when it comes to having fundraising events as far as their laws? I'll be honest, I don't know a lot about Kentucky laws because strangely enough, even though most of our clients we're right here on the border, most of our clients are in Montgomery County, Stewart County, Houston County, and we're only dealing with those Tennessee laws. So to be honest, I'm not that familiar with Kentucky rules. We're going to talk about some fundraising rules in just a moment, about some issues that do apply in Tennessee, but I don't have an answer for you. I'm sorry.
But if they email us, we
can look into it. I've just not encountered any situations where an event was being held in Kentucky, and to know whether or not they have a different rule. I'm not familiar with that. I'm sorry.
Okay.
And there's a question about fundraising.
So Tennessee has a very, let's say, unique law on games of chance. So bingo, raffles, things that you're trying to generate revenue for your organization, fundraising essentially. And a lot of people, I'd say most people probably don't necessarily comply with this particular law. You are required to.
I hope they do.
I hope they do. Yes, they could come back on that. But anyway, as far as it goes, you actually have to get approval from Tennessee as to the event itself, as well as the funds that you hope to collect, and that dictates the filing fee that you have. So with the initial filing fee, it's $50 no matter what, and then if it gets approved, you have to remit the remaining fee depending on how much that is. But if you look at that slide there right in the middle, the application period is pretty far in advance. So from the July 1 to January 31 each year, you're supposed to apply for however many events that you anticipate holding in the next fiscal year, July 1 to June 30. So this could be as far as 12 to 18 months in advance that you have to get approval for this game of chance or this fundraising
So
event.
to clarify, if an organization today decided they wanted to have a raffle or a bingo event or whatever, they are potentially anywhere from 12 to 18 months out right now getting the legal permission to do that.
Correct.
They need to know that. So we can't plan an event right now that we're going to have in the fall. It's too late. All right.
And yes, and that's, again, this is specifically for the games of chance. You can have a gala, donations, but if you're going to have that very popular, raffles and bingo, people love to play them. People love to donate, do a raffle, but that is considered a game of chance. So it falls under this. And it actually, I believe they remit a list each year or publish a list.
Right.
That the
You
state
turn
does.
in your application They compile all the applications. They go through them to make sure that they fall within the state statute. And then they list all the organizations, all the anticipated events in a bill that is presented to the state legislature. And then the state legislature approves those events on a year-by-year basis. So if you miss the cutoff for 1 year, then it's a whole nother year before you can even plan an event.
Yep.
So,
And the prices range, the fees range, if you are approved, from $100 if it's less than 5,000 up to $550 if it's more than 20,000. There's a little bit of wiggle room in the middle there, but generally it's going to cost between, no matter what, 50. That's non-refundable even if it doesn't get approved, and then up to potentially 600 once you pay the additional 550. How are we doing on time, Steve?
we're about a quarter till.
Quarter two, okay. All right, state business tax. Talk to us a little bit about that, Steve.
Well, in certain, this is a state tax, but it's also local. I guess technically it is a local tax that's administered by the state government. That's really the way it works. If you are typically a business that operates within a city, you are required to have a city business license and a county business license. If you have a business that's only in the county, you would have only the county license. This could apply to certain nonprofits as well, depending on if you're selling goods and services that would be considered more of a business type activity rather than part of your nonprofit mission. Okay, so you have to be careful with this. So just know that this is out there, and just take a look at anytime you're selling things. That should be a red flag to you as an executive director or a board member or whatever. Anytime you're selling things, just know that you could incur business tax, you could incur state tax, you could incur even federal tax, what we call the unrelated business income tax. So be careful about selling things, providing services, receiving grants, receiving donations. Those aren't of great concern. When you go to selling personal property, tangible personal property, you run into a whole bunch of different regulations. So just be careful with that.
All right, and then from the Secretary of State level here in Tennessee, every year you have 3 months after the end of the year to file your nonprofit corporation annual report. That's $20, as the screen says there. The initial registration for the charitable organization is $50, and then subsequently you have to continue filing that every year. I believe there's the charitable solicitation organization. We have to file that every year. We have 6 months to do that. And you can get a 90-day extension, which we were kind of surprised this year that Tennessee didn't extend the due date to June 3rd, from June 30th on. We called, I think twice. I had to call just to be sure, because most things got pushed back with COVID. Obviously, July 15th for just about everything that fell federally, and in most states as well from the income tax level. Even if it was due April 15th or May 15th, everything got pushed back to July 15th. The state of Tennessee did not do that for the charitable solicitations application or renewal for whatever reason, but you can get a free of charge 90-day extension if you do so timely. Now, if you don't, I believe it's a monthly fee of, is it $20 or $25?
$25.
$25 if you're for every month that you're late. So we don't obviously want to do that. Oh, it says right there, 25 for each month.
And in talking with these folks, their main concern is, let's say your organization has never filed these charitable solicitation reports. And folks, receiving a donation, that's a charitable solicitation. If people make donations to you, you're subject to this, okay? And so what they've told us from the state is, we're not in business to issue penalties. That's not what we want to do. We just want people to comply with the law. So if your organization has never filed these reports, it's time to start filing them. And they typically don't issue civil penalties for past violations, as long as it's not something that's flagrant and intentional. You didn't know about the law, you're a nonprofit, they're probably just going to forget about any prior penalties and just say, let's start from here and move on. That's the tone of the folks at the Secretary of State's office. So we've had good results in dealing with them. So if you're not filing and should be, let's get started.
Right, and there is that annual request for exemption if you are under that $30,000 threshold to keep in mind as well, if that applies to you. And one of the things that we run into quite frequently, we do several audits I know of because of this reason, if you have more than $500,000 in revenue, and you're a nonprofit soliciting any kind of charitable donations, and you are required to submit an audited financial statement with that report that's required 6 months after the end of the year. So that's something to keep in mind, that they will let you know if you don't.
And I really don't know of exceptions to that. They're pretty
one.
hard and firm on that rule. If your organization brings in more than $500,000 in revenue, and by revenue, that's not just cash.
Right.
We've experienced that as well. If your organization receives in-kind donations of whatever, products, goods, whatever that people donate, if in total that pushes you over the $500,000 mark, you're required to have an audit of your financial statements. So
just keep that in mind, especially if you're close to that $500,000 threshold that's out there. All right, I think we're pretty low on time, so we'll probably try and breeze through these. I don't think we have very many slides on local. Maybe we just have one, so that's easy enough. Tell us a little bit about the local.
yeah, on the local level, primarily city and county, we've already mentioned the payroll tax. So that could be an issue, especially in Kentucky. Some of the cities have their own payroll or income tax, payroll tax, as well as the county and the state. So you have to be careful with Kentucky on that. But property tax is the main thing I wanted to mention at the local level. The property that you own and use, that your nonprofit owns and uses, can be exempt from paying property tax, but you have to apply. You have to make application for that exemption to the Tennessee State Board of Equalization. And the other thing you have to be real careful about is that if you own property, that you're actually using it. I've seen situations where nonprofits have purchased property or they've had it donated to them, and it's just sitting there not being used for that nonprofit purpose. In those situations, if it's not being used as part of your nonprofit operations, it's just investment property or held for sale or whatever, then you are still subject to paying paying property tax on those properties. An example, my own church years ago, I can remember whenever we were in a phase where we were acquiring different parcels of property for extra parking and that kind of thing. I mean, very day after we bought something, we at least had to put down gravel and some stripes or something and put up some signage that said this is a parking lot. If not, then we would have been taxed on those properties. So you have to be very careful about that. I know another one of our clients that ran into that situation that had some property a few years ago. I can't remember if it was donated or somebody left it in a will or something. But anyway, they had some property that they owned, but they weren't actually performing any functions on it. And the state came back and said, you owe us some property tax because you're not actually using it. So you've got to be real careful about that. So.
All right, well, I think that takes us to the end of our information that we wanted to share. Does anybody have anything that they'd like to share, something that they stood out to them that might help them, that they might take back for discussion with those in charge at their organization? Or do you have any questions on anything we've gone over that we maybe didn't hit on specifically, or anything we didn't go over that you wanted to discuss now?
Valerie, Jay, are you guys still awake out there? I see your name's popping up.
Oh, there's Jay.
I'm awake. You're doing well. If you could send us a copy of the PowerPoint, I'd love it, Steve.
Absolutely.
I'll do a good job.
Great.
Thank you.
So I'll go ahead and give you our email addresses. I don't think they're on they're on the slide right there. Steve at srhcpas.com, and then David Fitch. So dfitch at srhcpas.com. So feel free to shoot us an email. We'll send you copies of the PowerPoints.
You have any
Email
specific questions?
email us your questions. Email is really the best way to reach out to us. That way we'll have time to research your answers to your questions and get back to you. So we're happy to do that.
Absolutely.
So anyone else? Okay. If not, Valerie, do you want to make any closing remarks? Perhaps not. Okay. If not, then we thank you so much for being part of the program this morning. It's really different to do this in this format. I love the live in-person interaction, and it's different for us to try to get accustomed to this. So I hope you got something out of it. And we thank you for your participation. Shoot us an email if you have questions. Shoot us an email if you'd like a copy of the presentation, and we'll send it right over to you. So thank you again. Hope you guys have a great day.
Thank you.
Thank you. Great job.
Yeah, thank you, gentlemen.
Absolutely.